Hey there, Top Dog Traders. Alright, here we go to part 2 of our live trading. And this is the same chart, same day, just a little further down the road. And now we're looking to go short. So let's see what we got going on here. We're going to use all three charts. Short term on the right, medium term in the middle, long term on the far left, short term on the right. So the setup that I'm looking at here right now is this second retrace in the trend. First retrace in the trend, wave 2, on the midterm chart. Okay, and so that's the pattern we've got. We're getting down below the 15 EMA there. Notice what I really like over here on the 9,000 tick chart, the long-term chart on the far left, is that we have a mini divergence pattern. So that gives us a very, very high probability of that being the final cycle high on the longest term chart, which is cool because when you get a setup on the longer term chart, that gives you a generally better to risk reward ratio when the trade follows through and works out. Of course, it doesn't always do that, but even when it doesn't work out, it usually still makes us more money than a scalp trade that doesn't work out. We've also got a setup over here, so it's a first retrace after the cross, and also it may be a first cycle high after dad turns down, as long as dad keeps turning down there. We'll keep watching that. So, but at the very least, it is a first retrace after the cross. So it's not a first retrace in the downtrend because the 50 MA is just flat. But I like that second chance pattern there, so that gives me a lot of encouragement. Getting on the big term chart makes me feel really good about this. Also, you see Mom is just kind of flickering up and down. It goes from green to red if you watch it. Intra-bars, so if it does go down, then it will be red as we go down. But it is pretty flat, so I wouldn't give that a lot of credence. It's not a super strong indication at this point, but at least it's not dramatically angling up. Okay, now let's go to our trigger chart, the short-term chart. Now, here we've got what has been called, I forget who coined this term, but I think they call it a stochastic pop. And that's where the stochastic indicator goes all the way down to the bottom of the range, it comes back up, doesn't go up very far, and then goes back down. And they would say that's a sell signal. And that's what we have here. It's also a first cycle high after dad turns down there. So I don't cover stochastic pops in my course. I did not invent that. Frankly, I don't trade them very often. I'm trying to remember who came up with that. You can probably Google that and find out who did that. It was some famous trader. But, yeah, they sometimes they work, sometimes they don't. You know, personally, I prefer, oh, that's great, Barry. I prefer, just say it that way, to, you know, short at a high and at extremes. But so here's our support level. This is blue level. That's what I'm looking at for my first target, where I lock in my first profits. So let's see where we go from here. So we would be filled there. And by the way, while we're waiting now, I'm probably not going to have too much to say here. It's one of the problems with the live trading. I'm going to look up the stochastic pop thing here while we're talking. I think that was the name of it. I'm not really finding, let's see here. Oh, there it is. There it is. Developed by, Jake Bernstein. That's right. Good old Jake Bernstein. And then modified by David Steckler. Okay. Interesting. But yeah, I believe Jake Bernstein, that does sound right to me, as my memory serves me well, that he was the first one that at least I know of who kind of came up with this concept. And, you know, it's the right idea. I will tell you that. It does have a good mathematical principle behind it, which is that when the stochastic indicator goes to the bottom of the range like that, see how it went all the way down to 0, that's as far as the indicator can go. So a lot of people tell you that's a bullish signal. No, that's actually a bearish signal. It's showing a lot of bearish energy to the downside. And so if it comes back up a little bit, doesn't go too high, see it only went up to about 50 there, and then came back down, well, that shows that we're still in a bearish sentiment. And that's the concept behind it. And the concept is sound. It is very sound. So might want to look into that. I just typed it into Google here to remind myself of who came up with that idea. And so, okay, bam, we're heading into, we've actually touched that resistance level now, or support level, I'm sorry. And we'll see what happens here. Now, you could either take your profits off right bam there, or see if it goes a little lower. Everything's down. K, D, and Mom are down on all 3 time frames, so this may go down a little bit beyond it, but if it does, I'd lock in some profits there. And not everything, but some profits. And, oh, okay, I would definitely lock in profits right there. Because what happens is, well, I'll tell you what, let's stop here and come back in a few minutes. Okay, we're back. So, yeah. So the blue line went away. Those are automated, by the way. Those are part of my custom indicators where that will automate horizontal support resistance lines. So once they're broken, then the program automatically takes them off, because if they're broken, then they don't, they're not as significant anymore. So now we come up and we put in a new cycle high. This is normally where I like to take a short rather than the stochastic pop. I like to get the very highs, but so this is now a first retrace in the trend on the short-term chart. Now remember, we're still in that last trend, or that last trade, because, yeah, we took some profits, but we didn't take all profits. Now, over here on the midterm chart, we've got our Jake Bernstein stochastic pop. So, K has gone down to the bottom of the range, come back up, and starting to hook back down. So now we might get a stoch pop. We'll call it a stoch pop. I don't know. Sounds funny. Over here on the midterm. But we do definitely have a signal over here for a first retrace in the trend on the short term. So what that does is, if you didn't get the trade before, you could either enter here, or if you did take the trade before and you took partial profits, well, now you're just encouraged, saying, cool, this thing's still going my way. And then, of course, we look over at the long-term chart, and everything's there is still good. And that's going to not change as much, right? So, because it is 9 times slower than the short-term chart, 9,000 tick chart, 1,000 tick chart, that is not going to show as much difference, but that is also a trade setup, and therefore can give us a really good reward to risk ratio. But you will see a lot of stuff going on, just like we did on the short-term chart, where the market came down, went back up, came down, went back up, going back down again, all, and not much really being visible as far as those kind of, I mean, it's there, but it's not as visible because you're not seeing the same kind of detail, and not seeing it under a microscope, so to say. And but the good news of that is, if you did take it based on, in other words, this could be an eagle eye trade, right? Eagle eye trade, the setup is on the long-term chart. So we've actually had here in this one trade, eagle eye, conservative cherry picking, and scalping trades, all kind of in the same trade flow, basically. So not necessarily all at, well, kind of at the same time. And then, but this will be what happens too, is we would be into a trade with one and lock in some profits as we did, wait for the retrace, which you know is going to happen. It's normal. You don't freak out. And then, hey, I'm still in this trade, and I got another setup to take. Now, some people, when that happens, they like to add more contract shares or lots. And that's up to you. That's a money management decision, a personal money management decision, if you want to add to the position when you get a new setup and you're already in a trade. So not a bad idea, but things get a little complicated. So now here's my new target. My new target is lower than we've been. It's the last wave low, the failed 3 there on the midterm chart. We've got a little cluster there. So that's where I'm looking to lock in my next profits. And we'll see if we get down there. And then eventually we'd like to go down further, right? Because we've only had 3 waves. We'd like it to put in an actual wave 5. So that's our hope, our dream. But market can do anything at any time, so we don't know what's really going to happen. But that's what we would like. So we'll see. Just again, we've got a little stochastic pop pattern there on the midterm chart. Those can be tricky. You know, they can be tricky. The math is there, but they don't always go. So the way I do it is, the only time that I'll take those personally is if there's a lot of other stuff lined up. So I don't take them just on their own merit. But if there's a lot of other stuff really strong, you know, the confluence of the energies kind of thing that we do, then yeah, I'll venture out and take a few of those. But generally, that's not something that I'm doing aggressively. But I just thought I'd point it out because it is a valid trade technique and a pretty well-known one as well. So nothing mysterious about that. Now we got to be careful here because, see, it looked like on the midterm, this is the problem with these stochastic pops, by the way. So in the midterm there, you see it looked like we were having a stochastic pop, and like right now it does, K is angling down, right? Went below 20, came back above 20, now it's angling down. But sometimes what they'll turn into are mini divergences. So if it angles back up, then we'll get a mini divergence to the, to the long side. And that's the challenge with them. And in that case, you can get really messed up. So, yeah. So I prefer just to trade in the direction of those mini divergences, convergences, all the second chance patterns. To me, I like that better. I find my win-loss ratio on those is better. It's more accurate for me, at least the way I trade it. So that's what I prefer to do. Okay, we're back into the stochastic pop pattern again. But you see how fast these things can change, right? Interbar. It's looking one way, and then it can flip around and turn against you in just a couple seconds, or sometimes even literally in 1 second. Okay, this guy's kind of meandering there. It's not real aggressively moving down. We don't have a lot of order flow coming into the market. It's market's really slowed down here, but it's still kind of in fact, now if you look over at the short term, we're getting a little stochastic pop pattern to the downside as well. So we'll see if that follows through or not. Again, we want it to get down to the blue lines at the on the midterm chart there. That's our next target for our next exit. I usually get 3 exits out. Sometimes only 2. Just kind of depends what goes on with the charts. As long as everything's going my way, I'll look for 3 exits. If everything turns around so much so that the energies are all against me, then I'll just get out with the second exit, not wait for the third. So, yeah, the time, okay. We've got 8 minutes left till the market closes. So now, actually, we've got to look to get out, just based on time alone. 1300 hours is 1 o'clock California time. I live in California, so that's 4 o'clock New York time. So I like to get out a little before the market actually closes, so that if I need to call my broker and get out of any positions, I can do that before the close. So just purely based on the clock, we're going to have to take an exit here in a minute or 2. So yeah, that's what I like to do anyway. Again, just purely to be able to get out and call my broker if I need to.